with you guys what it is.
Yeah, yeah, I'm with you on that. Hey, let's go ahead and get her started then. Good morning, Ken at Tortoise Capital. Sunday morning coaching, March, April 19th, 2026. And let's just do a quick check-in, how we're doing, how we're feeling. And let's see. Uh, a really good day on the soccer field yesterday with me and the kids. Let me hit the mute button. I'm getting some feedback from Michael. Yeah. Yeah. Getting getting a good day on the soccer field yesterday, and to the point you were discussing earlier, uh, Michael, about having a plan and sticking to it and taking the next step. Um, so yesterday on the soccer field, I met a nice lady. I used to coach her daughter 20 years ago with my daughters, and her daughter is now moving on, and she's there with her granddaughter, the daughter of uh, my player, and they just had a death in the family, and we were just talking about the passing of time and how important it was in her family for the things that we'd built together on the soccer field. She had been my manager for a long time, and her daughter was not a natural soccer player, a big husky girl, but we found a way to let her discover the soccer player inside of her, and found a way for her to play that was connected to who she was. And it was a very powerful thing for her as a player. And now her granddaughter is going through the same thing. And we were playing yesterday. We were just thinking about the passing of time and how important um, those days were. And the, she was expressing gratitude for the way we approached the game, and the way we got everybody involved, and the way we found space for each kid to play. That was more important than winning or losing, but creating the sense of teamwork and um, mindfulness. She didn't use that word, but that was kind of what it was. But it was the idea of each day coming to work and doing something that is aligned with where you want to go. I think of that in terms of the difference between strategy and operations. It's pretty easy to come up with a strategy. You just have to assume where you are, where you want to go, and describe a grand vision of how you're going to do that. And then there's the work that you do each day, taking the next step and making sure that each step is somehow contributing to that larger strategy. That's I think it's more important to do that. What's the next step? How do I keep going? How do I maintain momentum? Inertia. It's a question of which side it's on. Bodies in motion stay in motion. Bodies at rest tend to stay at rest. How do I get started? How do I keep going? Once you can achieve, you know, takeoff, everything is steering until the landing. You got to get escape velocity. You got to get out of the gravitational field that holds you in one place. Once you can achieve breakthrough or uh, liftoff, everything else is steering. You can't steer unless you're moving. So it's important to keep going, but it's important to have that contribute to the journey. So we don't want to just, randomly trade a system that try this, try that. There's no connective tissue. So we have to have some sense of direction. So that comes down to what I think of as in planning, you're making the map. In preparing, you're getting ready for the journey, and then you're taking those steps. So, in my view, the you don't ask your horse to make the map, but when you're on the trail, you trust your horse. There's a relationship now between the map and the horse that you're riding. The map is your strategic plan, and you've been thoughtful about it. You've incorporated all the elements of your vision and your life and your values, your purpose. So that's your map. You have to take care with making your map. Uh, but when you're on the trail and there's a difference between your map and what you see on the road, trust your horse. That horse knows more about the trail than you do, and it's carrying you. It senses danger. It wants to run. So there's a certain relationship now between us and our horse. You got to take care of the horse first. Uh, you have to gain his trust, and then you have to learn to trust it. So I would just say I try to bring some sense of that into the evaluation of data of performance. So when we get plan, prepare, execute, and assess. In the assessment phase, what I'm trying to really do is bring together me, the map, the horse, the trail, what's happening, where am I, how do I make adjustments to the map, what did I learn about the map today, what did I learn about the horse today, what did I learn about the trail today, what did I learn about myself today. That whole thing goes together, and each day is connected to the previous one in some way. These are not individual random experiments. There's some continuity of purpose and identity carrying us through there. We got to learn to accept that and start with where we are and keep taking the next step. What is the next best step? Seems to me to be the really important question for us to answer each day. Once you have all those other things, you still got to decide to take the next step and in what direction and do that well. So that's the sense of continuous improvement and energy and resilience and grit, hoping to steer towards wisdom, and walk that path pretty well. That's what's on my mind these days lately, and today specifically, as I was thinking about Fran and her family, and um, it was it was her husband that passed away, and it really affected their family a lot. And her granddaughter wanted to come to play soccer. It was important, um, and so we just had some moments there on the field together as we watched the kids playing, but also thinking about the larger turning of the world as it goes around the sun. Uh, and it was a it was a it was a moving experience for me to be out there watching the kids just being free to play, sort of unaware of all the other adult things that we worry about, the burden that we carry for them, as we try to help them discover who they are. And that's what's on my mind these days. That's my check-in, things I'm thinking about as we go forward. Uh-huh. Michael, how are you doing these days? Okay, unmute. Sorry.
Hi, can you hear me now? I'm good, thank you. Quite busy. In Poland, the housing market is quite doing well at the moment, and because it's part of my job, so I have some work to do, and I'm doing as much as I can because these cycles now they going, in my opinion, like quicker. You never know what you can expect, next week actually. So when I have work, I work because my main income is from basically commissions, right? So when I have clients, I trying to build my cushion for maybe few months who might be not that good. And but general health, okay. Review your presentation, our presentation from last weekend, and I was watching actually two or two times, but I also, review from a little bit spaces, just to because when you live, of course, this our mind have a limited span of remembering things. So I think it's a good idea to watch it two or three times, and that's it. So I was thinking a little bit what you said. What should I start to do? And and this is my how my weeks go.
Alex, how are you doing?
Thank you. Thank you. I'm doing well. Well, generally, we had a somewhat discussion there. I think the way to describe what I'm doing, I'm trying to repair an engine on the car while it's moving.
Yeah.
It's a bit of a challenging and somewhat as Michael, I have a full-time job, and this particular week there it was really busy, so I didn't have much time to look at my investment side. But I did make some analysis of my prior trades, and was somewhat surprised in both ways. Uh, but uh, but I'm trying to take your challenge, the Trail Boss challenge.
Yeah.
It's also not consistent, but I'm will be on it until it becomes one. Yeah,
Well, it's funny you should say that. I've expanded that to some other people that I not traders, but some scholar practitioners that I work with that are trying to make progress in their own consulting and the what they're doing at work. And it's surprising, but not surprising how hard it is to do one thing each day that you intend to. To start the to start off saying, hey, I'm going to do this thing tomorrow. It should only take me 30 minutes to do it, and it will take me 4 hours to do it because of the way that I am. And how thank goodness there's 24 hours in the day to do a 30-minute task. Otherwise, I wouldn't get it all done. But yeah, that is connected to what I was talking about before about taking the next step that is aligned with the strategy, whatever it is, whatever the work in progress is, taking it into those little bite-sized steps. I can only step as far as I can step, but I got to take that step. And it should be on that path that I've charted out. And it's not without friction. And there are distractions and there's effort. But man, taking one step a day for 30 days, non trivial. If you think it's easy, give it a try. And glad to glad to hear you're walking that path. Um, yeah. We'll come back in a minute. I'd like to hear some about your analysis. So, Luis, how are you doing today?
Good morning, Ken, and everybody else. Doing very good here in Austin. Crazy week in the markets. Looking forward for this next week. That's it.
Yeah. Yeah. So what I'd like to do with Sundays is make sure that I review the weekly report, and but also listen to your to where you are in your pathway. So, with your permission, I'd like to go quickly through the report and just hit some notice what we notice. Here's the way I'm thinking about that report and some work that guys in the other sessions are doing now with the AI is that I look at that report as a meteorological study. You know, it has scientific instruments, if you will, measuring aspects of climate and weather and and over different periods of time, long range forecasts, short range forecasts, uh, flash flood warnings, things like that. And it's always been a challenge with a 23-page report to tell one coherent story about it, to say, oh, and as if I could read 23 pages and then say, and therefore I should now do this. It really should be seen, I now think, as a weather report uh, that has to be adapted to the thing you're planning to do with your family tomorrow or next week or next year, depending on the time frame you're looking at. It may even be all of those things, and that you use pieces and parts of that thing to give you the information you need to take effective action. Um, we're looking at ways of using AI to automatically interpret and create narratives on certain subsets. Like I've been playing with the, hey, find 5 good 1 day trade ideas for tomorrow. Because there's a couple different places I have that from different systems that report on it. You know, summarize the risk conditions in the market, identify the swing trade themes by sector, things like that. Um, so that's how we're thinking about that report. How I'm thinking about it lately too. So let me go ahead and jump into to a quick review of that. Yeah, I would agree. It is a crazy market, and shouldn't be surprised when it's populated with crazy monkeys that seem to be driving drunk. Uh, all right, can you see that?
Yep.
And I'm going to try to remember to move the other windows off. There, is that screen free now or clear?
Yep.
Okay, good. All right. So as I go through this, I'm looking. First thing I do is always look at this. Yeah, we think it's crazy. It's a bullish normal market. What may be crazy is this feel right there, the overbought on every time dimension. You wouldn't know that we were a world at war. Uh, price is 6.5% stronger than the 200-day moving average. That's bullish. The ADX is 27.5. That's strong. ATR percentage is 1.34. That's normal. The risk Z is real. This is a measure of craziness right there. It's a Z score of 2. It's very hard for it to get to 2 and stay there. This was the beginning of an abnormally amazing move. There was a COTA 2 in the risk Z. And so I always look for these turning points. Anytime it gets below 1 and makes that move is the beginning of what could be an amazing move. This one was really extraordinary. This suggests that we are at such an extraordinary stretch of positive volatility that we'd better be mindful of sudden sharp reverses. Doesn't mean that it can't keep going, But this is like one of those on the rocket to the moon, we've escaped gravity, and now how far is this going to drift before somebody says, "Hey, we got to return back to Earth"? What is the next adverse volatility effect, and how does that gain momentum on the way down? What could be the triggering events? So that's how I'm using the thought process from engineering of failure mode and effects analysis, in which you take a look at what you're doing and you say, what are all the ways that that could go wrong? What would be the signal that it's starting to go wrong in that way? What can I do to detect it early? What can I do about it if it starts to do that? How do I tie that into my decision support framework so that I gather the information I need to watch those key indicators? So that's what I'm getting from this. I'm noticing uh, those symbols are still doing very well compared to the U.S. because this is what it was at the start of April. This is what it is today. It's still Latin American emerging markets. Um, the energy sector has been an opportunity. And again, it's the internationals and commodities dominating. These two, Intel and Caterpillar, have just been crazy good. This has been USO has been an interesting swing trade. It's in a condition where it looks like this now with a big gap down. It's still above its long term 30 moving average. So this now creates an opportunity in that gap down, then almost it opened where it closed. It opens up this possibility. You wouldn't be surprised to see price of oil spike because of war. You also wouldn't be surprised to find it returning to the mean. And that means there's an opportunity for short term trades in there because if you simply take a look at the size of the manageable risk box, you have a multiple R trade in both directions in both energy and oil. And that's going to be always the first place that I am looking while the Straits of Hormuz monkey around. I guess if I was just a better planner, what I would do is figure out how to find the guys that are making perfect energy market trades as if they had insider information for uh, policy changes in the U.S. government because they're making billions of dollars on surprise moves in oil. I guess I just need to be better at finding those guys. Um, the ETF2 theoretical exposure, 2 weeks ago, that was 0% because 10 out of the 10 indexes were below their 4 month moving average. This recent move that started with this extreme volatility spike brought 9 of those 10 back above their 4 month moving average. And today, the last one, which was the S&P, is now above. So it's back to 100% exposure. That's another measure of craziness um, in this world. I would just remember Lewis Carroll and Alice in Wonderland. This is what we were talking about earlier about there's it's pretty easy to figure out where you are. Maybe it is. It's very easy to figure out where you want to be, your ideal state, but then figuring out 3 ways to get there, which one to pick, and then how to go about doing that. Yeah, so you have a strategy and you prepare yourself, but you better pay attention to what happens on the trail and trust your horse. So yeah, the Cheshire Cat reminds her it depends a good deal on where you want to go and how you're going to get there. Yeah. Questions on page 1? Yeah. So if there's questions or comments as we go, just go ahead and jump on it and say, otherwise I'm going to just keep going routinely. That's a move of historic proportions from was it 6:30 to 7:10. You know, that's a 10% move in 6 days. A turning point. You know, the slope of this, I always pay attention to the slope and I just draw those projections. This is supposed to go that way. If the price keeps failing the way it was, then the RL10 should do that. In here, when it gapped down and then reversed to here, that made the RL10 slope change. It went positive here inside that uh, price bar. The slope went positive. Entered entered the dragon, crossed the dragon spine, left the dragon, crossed the 30, going through that gray zone around the RL 270. That's the buffer. The RL 270 never really flinched. The RL 90 turning point right in here. That move made the 90 flatten out almost and started to go negative. But now this move has flattened that out. So and now prices come right back to the 90, and I put it at a compound critical state. You've seen it fall off the cliff, then have an extraordinary rebound, and now it got back to simply where it was. And you say, the conditions that it looks like that it's in right now are identical to the conditions that we saw right here just 15, 20 days ago. World at war, drunken monkeys in charge, uh, religious nut jobs on both sides of the equation, making decisions about our life on this planet based on their notions of the afterlife. You can't get crazier than that with nuclear weapons and global markets that are so tightly connected because of energy that every idiot on the planet now has a chance to reach and touch your life. 200 years ago, that wasn't true. You could ignore idiots. Can't do that anymore. Idiots are part of the equation. So I now look at this as a sort of the tail of the tape. Where are we? Right back at the compound critical state. Is it going to do this? Is it going to do that? Is it going to go somewhere in between this on this range fan? Is it going to go like this, like this, like this, like that? There's some probability histogram. You know, if I could rotate that 90 degrees, I could tell you what's the chance that it can continue to go in that way is actually pretty small in my view, just because of the risk Z. There's so much uh, uh, volatility in a surprising direction. It's very hard for the system to maintain that amount of nervous energy. So I think it's somewhere in here like that. I don't think it's this powerful. I can make a strong case why it continues to drift higher because we are above previous highs and bodies in motion stay in motion. I can make the argument why it starts to retrace. I can make the argument easily about how it could collapse just like it collapsed here. That's the easiest one to explain. That's the obvious one. And so maybe that's not the most likely one. So I think I could understand muddling through. I could understand drifting higher. I could see starting to roll over. I think those three are the more likely ones. That makes me look for evidence each day of just one day at a I'm really literally taking this one day at a time and starting with the bracket of yesterday and saying yellow zone, green zone, and red zone. If you had taken that approach all the way through this, you would be really, really happy because you're getting it 80% directionally correct. Look at the directionality: open, close, open, close, open, close. Now you notice that the volatility is the range is smaller, but it's still directional. And the open is anchoring the price at either the high or the low of the day. And all the way up, it was the low of the day and finished higher. But the magnitude of the move is getting smaller as it approaches the station. So that's why, to me, this is a perfect compound critical state ready to go. Now, on this one, when I take a look at the long-term time frames and then the swing trade time frames, this is today, the 0 day, and then the 1 day time frame. I don't see any reason to try too hard on swing trades. To me, I want to be directionally correct with the relative strength leaders for the long haul, and I want to get the daily trade correct. But as it stands right now, I just don't see much edge in the swing trade because of how sharply these things have moved. And at turning points, you can build, if it were to do this, I could build a swing trade in that direction by linking together day trades that are directionally correct and that are feeding forward. That's how I'm swing trade right now, especially. But that's how I have been swing trading, is getting the turbo trade correct intraday, and then if it keeps being directional, trying to save 20% of the position for overnight and then just adding to it. So I take care of the turbo trade first and then the core, and let the turbo trade build the core position, and then pay attention to the core position and then add turbo to it. So it's like a turbo core turbo kind of an approach. And I think that's entirely appropriate given the fact that we have a small doji at a all-time high in a world that's at war, that's very vulnerable to moves like this. I can't think of any other ways to say it than that. So that's what I get from this chart. For me, this view of the world, this RLFF, the regression line fractal framework, it incorporates the 270, the 90, the 30, the 10, price itself. The river is the dotted line. And I feel that it helps me craft the narrative, the top-down view of the weather. If the 270 is climate, I look at the 90 as the weather. And then the RL10, it's like in Kansas we have a saying, we take a if you want to, you put a rock outside your window. So there's some rock right here sitting on a box, and you say, "What's the weather like?" And you're like, "Is the rock wet?" It's raining. Is it dry? Not raining. Is it, can you see the rock? Then it's sunny. If you can't see the rock, it's foggy. So that's sort of what the RL10 is for me. And I simply look for turning points. Where's the next turning point? What's the size of the length of the moves? And then to me, this is sort of the 30 is wisdom. That's the owl. The fact that the turning point on the 30 was here, the turning point on the 10 was here, the owl entry was right in here. So that's how I view that chart. What I'm going to try to do with the AI is take this discussion and have it digest it and see if it can come up with standard interpretive rules to help build narratives as well as just reading indicators. This one combines the longer term time frames. This is the 3-day market or the 3-day bars. Again, you can still feel the same thing. The 9-day bars. Now that looks like this, and that's just so this says, hey, keep going and pay attention to the previous bar. That was the previous bar. When this broke out and kept going, that said, keep going. Oh, it did. This one says, if it keeps going, keep going. Follow it. That worked on the way down and worked on the way up. So to me, there's something powerful on the 9-day. If you take whatever that bar is and then just build your little framework, I should want to be long. I should certainly want to be short. And in here, I have to dial into 3 to get a closer examination, and into the 1-day chart to get an even closer examination. But the red, yellow, green, or the green, yellow, red approach makes a lot of sense on the 9-day bars. And then when I look at if I go from the 1-day to the 3-day to the 9-day, the next step up is the monthly. And that's where I'm using that blended monthly rebalancing to get my sense of month to month exposure for that long term time frame I was talking about. And then the way I do that is each week I'm looking at the same system that's going to generate the monthly decision. So if this diamond represents the decision, and I get the March of the Baby Elephants, I watch each step it's taken each week so that when it's time I knew what decision I made last time to go in this direction, and I know I'm going to make another decision up here. I just look at that weekly blended monthly rebalancing status to see, is there anything surprising or new happening as that elephant keeps taking his little steps. That's how I think about the relationship between day trading, swing trading, position trading. This is the last 150 days. It tells us the same thing. No change to that. When I add my overlays to it, there's my yellow zone. This black line is my price. There's my 10 straight line regression. There's my long and short signals. This is what it's done in the last 5 days. This is what it's done in the last 10 days. I noticed that the moving 90 regression line is curled up. that and the river curled up right here. This is I added the 60 lately just to see if I could learn anything from it. That's obviously the nice intermediate bar or line between the 30, the 60, and the 90. In a certain way, that looks like, to me, that's all looking like its own river, the 30, 60, 90. So when the 10 makes its turn, you know, and crosses the 30, crosses the 60, crosses the 90, it just crossed the regression line river. This is where the RL10 turned. That's how long it took for the PSAR to flip. 1, 2, 3 days. It took for the PSAR to flip after the turn. And when it flipped to here. That's from the RL30 or the RL10. The RL, so that's the black dot. That follows the moving RL60 pretty closely. That's pretty interesting. The red dots is the PSAR that's based off the RL30. That didn't switch until here. That was another, let's see, 1, 2, 3, 4 days. So it took 3 days for the RL10 PSAR to flip. It took 7 days for the RL30 PSAR to flip, by which time we are well on the far side of the river. But that's like an active confirmation, you know. Here it just crossed the dragon. Here it's already crossed the river itself and is up and going. That's almost like, hey, free and clear, third mouse or fourth mouse. And you can see how fast they're able to accelerate. That is a huge amount of territory to give back. So while the PSAR was helpful over on this side, that's not a good stop in my view. Like to me, the 2-day low feels like the correct stop because that was a doji and it resolved to the upside, but that was still, so that's now a support level. So I think price really has like a 2-day yellow zone in here to work with. And then it enters this support level. If that support level were to break, then all this was noise. And then if that breaks, where are the targets? Well, there's the first thing I look for is a reversion to the mean, and that's the dotted red line is the middle of the river. So that's at 668. So if that breaks, that's 698. That's a $30 move. That's 5%. So if my price is right here, which it is, and I use that as a hard and fast stop, that's protecting me against 2 units of risk on a return to the reversion to the mean. And that also tells me that that is a stop and reverse price, that I would go short at 698, directionally speaking. If it gets below 698, my whole orientation right now, which is up and to the right, is now short term corrections. And if it goes below the river, then the next stop is the bottom of the dragon, and then the bottom of the RL10. And if it drops below 635, I should have 3 positions short. Now the question would be is if it breaks below here, do I add a second position here or in here? I got to add a second position somewhere in there. I'll figure that out. But I definitely want to have 1 position short here. Maybe I may be able to get turbo positions in there short, but I need to have a second position short by here. That's where I think. So that's how I use the daily health check to start doing failure mode and effects. And now I know what to do here. That's continue to one turbo trade 1 day at a time. That's all. And down here, though, I can actually build a strategy because I can start calibrating these moves and finding key price levels. I can't do that up here because we're at an all-time high, and this is all emotion and all geared towards energy and all geared on war and to a certain extent inflation and politics and all that, but it's energy and emotions, and that's because of war. So that thing, you know, you make a tentative plan, but you better pay attention to your preparation and your risk and stay alive. So that's how I'm interpreting that chart. I'm using these things, these little markers like that, because I'm trying to show you the things that I'm looking for on the front end as I go forward. I'm looking for indicators to start making subtle shifts like that as to begin to see the turning point as it happens. The turning point happens when the slope of the RL10, which was going this way, goes that way. That is the very definition of a turning point. So now I'm thinking about, hey, what does that look like as it continues to go? How far can it go? And each one of these other things is confirmation that this thing is going from tentative turning point to it's starting to grow and go. And how do I know when this thing's getting long in the tooth? That comes. I get interested in this angle. What's the angle of that? The stronger the upward move, the more powerful, the bigger that angle. So I measure that to get a Z-score. That also tells you how unusual. You can think of that as in a sideways histogram. So a Z-score of 0, Z-score of 1, 2, 3. So now what I have is if I were to build that as a histogram, it looks something like that. Those are the probabilities. This is not a Gaussian normal distribution. It's a fat tail distribution. So we're somewhere up around here like a Z2. And so it's hard for it to maintain that. So that's what I mean when I say I'm taking a look at that angle. And then this angle over here, if this was day minus 10 to day minus 1, this is day minus 30. This regression line, which is here to here, that's a 20-day regression line that simply describes those 20 days, then these 10 days. So I'm taking a look at the 30 in terms of 10-day and the next 20, sort of like fast and slow. The longer term memory of swing traders still bruised and they're still expecting down. When I see that kind of divergence, I know that looks like the mouth of the dragon right here. If that's his body, that's his jaws in that angle. The difference in that angle, that is maybe the biggest open mouth dragon you've ever seen. The difference between that angle of the blue line and the red line, it's harder to get bigger than that in a 30-day period because that was kind of an extraordinary sell off. And this has been an extraordinary run up. That tells you the explosion in here. The shift in mentality was so big that we're still kind of in a state of shock. That little doji was a state of shock. It resolved to the upside, but the size of that move was not as big as these other moves. This little explosion from here to there, that was pure Trumpian Twitter madness, you know? And then that's taken that many days to process it. But that idiot can make a statement anywhere in here and have the same kind of catastrophic explosion. So you can't swing trade in that environment. If you're me, maybe you can, but I can't swing trade in that environment. I can long term trade and I can day trade, but I can't swing trade. Not in my skill set. 30-minute, yeah, just the intraday moves just continue. These two, what are those two things? Yeah, those two little circles were the confirmation of the turning points when things went from down to up and down to up. That was happening. This little, the fact that it gapped up and then did not fail is what turned those longer regression lines to an upward. This right here is the 30 SMA sloping upward. That's how far it has to fall to get back to the mean. This is that 2-day low. That's the contingency trade to the downside.
Ken, if I may ask, how do you long-term trade in this environment? You mentioned that you can
BMR.
BMR. Okay.
Yep. Because that is wide. That's a 10% trail.
Uh-huh.
So I follow the rules on that thing, and then I monitor it for exceptional override. Like it was this picture again. So I start each month with the BMR, and I know I'm going to make a BMR decision out here, and I have that with 20% of my capital, and I have 40% of my capital allocated to swing trades, and 40% of my capital allocated to day trades. Right now, I cannot swing trade on its own basis because of what I just described, the craziness of this market. So what I do is I use that money and I go protect that feels like the baby, that feels like the march of the elephants. So I use that money and I'm checking things on a weekly basis to make sure I still like the stops, but I may use this money to hedge, or I may use it to go turbo on a position that's long. So those are always long. So I might add to a position with the day trade using the swing trade money. And I might use that swing trade money to pile on intraday turbos. But I'm not doing swing trades using swing trade strategies. I'm using the swing trade money to do one day turbos on the BMR or on day trading. So I'm always going to be 20% exposed from here. I might use that money to hedge, to turbo intraday, and to hedge it overnight. Because that's enough money to make this a protective move. Like, it is rare. It's not impossible, but it was rare for the gaps to be advantageous to the BMR. What's advantageous to the BMR is that bodies in motion tend to stay in motion. So the daily move is fine. So I can turbo that, but I'm worried about the crazy overnight thing that harms the market. So I will use this pot of money as a hedge for the overnight trade. And then I'll use that pot of money to get bigger positions on the day trade. Because when things are crazy, day trades are optimized. Look how big the ranges are and how directional those moves are. That's when I want to be intraday trading. That's not a time that I want to swing trade. So I use whatever money is not going to help here, I just send it down here to day trade. When things calm down and get back to normal, then I'll start picking up the regular swing trade, like 5 days down, channeling overreaction, that kind of stuff. That answer your question?
Yes, thank you.
Okay.
Yeah, I may ask some clarification later on, but
Sure.
thank you.
I'm looking at ETF 13 now. Treasuries are below their 4-month moving average. ILF, I mean, that thing is head and shoulders. That's pretty amazing. Let's see. So that's the Russell and the tech trading, short-term trading pops. Emerging markets has the same qualities. The pop in the S&P is not even as good. So if I'm trying to take advantage of US pops, I need to be one of those two. But that's tradable. Healthcare and finance getting murdered. Staples getting murdered. The oscillation in energy. That's why this is a great one-day trade that could. If I get 3 one-day trades in a row in energy, in retrospect, it looks like a swing trade. But each one of those is its own separate daily move. It starts and finishes there. Yeah, because the next day also did that doesn't mean that I should have been swing trading. It means I should be taking one step at a time in the direction the market is taking. Is it going to go this way or going to go that way? I don't know. I'm not going to bet until I see it start to move because the size of the move is so big that I can give it a piece. Here's takeoff and here's landing. I can aim for that middle section and reduce my risk. Let's see. That's an interesting flight away from quality, away from utilities, and into tech. Wow. Banks had a nice recovery. Now I add the world market indices. So Brazil and Mexico as part of the phenomenon of Latin America, right? So Latin America is this. Brazil has been that, and Mexico is this. So Is Brazil going to continue to sustain that, or is that the start of a sell-off in Brazil? Well, what I know is that tech and clean energy were doing this. This looks like a flight away from Brazil and back to the US. And emerging markets doing pretty well, but not Brazil. It looks like Brazil cooling off, but the rest. So here's how that looks like to me. If this is Latin America, and this is US, and this is Asia and Japan, and that's Europe, and you have some element of emerging markets in both of those, the emerging markets have been doing great. Latin America has been doing double great, and the US has been getting slaughtered. But what you see right now is the Brazil trade did not follow through. That might be Brazil peaking, but emerging markets still going, and then the US starting to recover. So if the US continues to recover, it wouldn't surprise me to see that people exit the Brazil trade in order to get on board the US trade. The interesting one to me is the emerging markets. Is that going to continue? Is that going to continue to go up at the same rate as the US? That's an interesting look to me. The differentiation between the Latin American trade and then the rest of the world, the rest of the world's emerging markets is fascinating. What part of the world emerging markets is going up since Brazil and Mexico are not going up? Well, we might check South Korea. See, so Australia is not really doing it. Asia less Japan isn't doing it. Japan is doing it a little bit. Um, must be Europe. Got to be Europe. Yeah, Europe's a little better. Yeah. This EFA looks like that's the EFA is the S&P for the rest of the world. So if you took a look at the large caps of the world and you divided it in them down the half, the S&P is about 52% of that. EFA is about 48% of it. So EFA is still working. Not quite as good as the S&P, but that's different than I think the Brazil and Mexico trade really vulnerable. That could actually be a short-term reversion to the mean trade. I'm going to be watching for that. Now, when I write the AI interpretive prompt, I want to see it able to replicate that kind of reasoning. So when it listens to this, maybe it'll take that on as a task. It will. All right, now the Dow 30, now I'm starting to get more actionable. Intel and Caterpillar. I talked about those two earlier. I've got positions in both of those because the move that has resulted in them being so anomalous happened over multiple days where Intel suddenly became a lot better than the semiconductor sector, which was better than tech, which was better than the S&P. So Intel is interesting. Caterpillar, just amazing. I mean, a year ago, that thing was at 250. and it was a value play. That was, if you look, Caterpillar was at about 400 and dropped to 250. And I started accumulating it around 300 with a almost a BMR position trade. Each little successful piece, just keeping a piece, keeping a piece, keeping a piece. And now I just kind of wake up and say, holy smokes, it's at 800. So while we like momentum, if this is the S&P and the high relative strength, I also pay attention to low relative strength and sell-offs, and then that recovery phase. And what does it take to start buying quality companies as they climb up the ladder out of the shadow until they can become high RS? So that's the story of those two companies. The story stocks are back on. That's what's happening. I love Google as the long-term winner in the AI space. I'm telling you, Gemini and Notebook LM, wow, they just continue to roll out good things. Gemini, their AI agent, their AI model, is at the top of the leaderboard for quality. And they now have it built so you can create an agent that will now take a look at multiple notebooks. So you can now optimize these as miniature focused reference libraries and then have an agent that will traverse those and come back and report. That gives you uh, unlimited body of knowledge that's curated. I spent a lot of time the last year, 2 years, building self-contained bodies of excellence in libraries. I got about 30 because it was Google. It allowed me to do deep search, find things, bring it back, and then turn that into a really powerful, focused notebook. That's what the 5 frames is, the notebook that's in support of our trading body of knowledge. That has 350 million curated words, getting better all the time. And then I have one that does change management. I have research methods. I have strategy and planning and a bunch of stuff. But I got about 30 different bodies of expert knowledge. And now Gemini lets you make an agent that will connect all of those. That is such a win. It's just hard to describe how powerful that is. So I'm going to try to describe it. So you have all the literature of the world, the entire body of human experience coded in words out there, a giant mess of a big, this is like a witch's cauldron, you know, like a big black pot. It's just bubbling away. And then each large language model is trained on that and comes back and has an array of what it saw in all that literature. So each one of these has its own sample of that. And then inside your head is your own large language model, which is how your brain has organized all of your material. And because of the way our brain works, you might be aware on your best day of the top, I'm going to say 10%. And if you're an expert and then you can go deep into your trained experience, you might get to the 30. But we know, even in experts, that about 70% of what they know for their profession is below the level of consciousness. That's well established. So this is just down there in the depths of your shadows. And when there is some trigger event that occurs, it comes up as a shock of insight. And then the experts know what to do with that insight. Amateurs do not know what to do with that insight. To an amateur or a hobbyist, it's a knee-jerk reaction of fear or greed. To a trained expert, that leads to trained behavior. And that's the difference. So your brain is this large language model. Now, when you spend a lot of time working with AI, that AI gets tuned by you if you do it correctly. By giving it your preferences, your desires, your intentions, your constraints, you end up shaping the way that thing responds to your language model. Inevitably, and I've seen this in myself, like any conversation, that thing is now, it shapes the way I'm thinking. Even the inputs and outputs that I get from it, the way it organizes knowledge for me. In fact, the way that I deliberately build a second brain over here with notebook LMs and now linked together by Gemini, that's my brain. And then my second brain is being tuned intentionally by LLM work. That's changing the way I think and how I think. Now, the critical thinker in me has to say, look, the longer you do that, the greater the likelihood that you build this strong connection. This is like the corpus callosum. This is like right brain, left brain. You have to be concerned that you have been captured by the gravity well of these two really powerful language models working together. You got to be concerned now about this area outside here. So what you watch for is the time to question what's coming over from here is when it's a long answer, it's a confident answer, and it is persuasive. When you get that kind of work coming in from here, that's when your risk manager should be most concerned about what else is happening out here. So what you have to do, in my view, is that you have your AI, your primary AI, and the human, and you continue to work that. And then you use an additional separate independent model and out of sample model to independently verify what's coming out of that. You must use a different model, and you must start with what this thing produced, because you don't want to pull that thing into here and have it get captured by what's going on here. To be true triangulation, this is like the executive branch and the legislature. I need the Supreme Court over here to make an independent judgment about what's going on in that relationship. That's my governing structure. So when I put together my personal human AI relationship operating system, my declaration of independence and interdependence is my identity and my values. and my purpose. My constitution, which is derived from that, is this governing structure of the executive branch is the human, the legislative branch is the Congress, and the Supreme Court is my independent auditor. And from that, I have more confidence that I'm not going to be captured in this mutual admiration society of two large language models, one biological, one digital, that are collaborating so much that they're starting to merge. I need to have the separate independent auditing function. That produces the body of law. These are my operational processes in the codex. Those are all the working models. And then I have a book of standards and forms, which is my tool room. And every piece of code that I write that's working in the codex, that can be used as a building block for other things, gets stored in my best practices. And then I have my maxims for machinists, which is the 100 failure mode and effects analysis. That's a list of the 100 top ways that AI reliably fails in the world. And I make sure that when I have an idea for something I want to do and I turn it into a project and I write an AI agent or code that works using my best practices, before I ship product into the world, I run it through the failure modes and effects analysis to see what can I do to strengthen that against the known failures that are going to happen out there in the world. And in that way, those 5 documents, those 5 books, if you will, forms my human AI relationship operating system. It continually gets better because as Codex improves and I get more standards and forms and I find new maxims, every piece of code that I ship should be getting better. And this structure of policy, identity, policy, and governance ensures that this will continue to be improving up and to the right. So that, in my view, is a professional relationship between me and AI. And you need to know that that's what's going on inside my head if you're listening to words of coaching that I give you. I cannot stress how important that is. I can't overstress. I can't stress it. I just stressed it. When I look at this is the ETF Max. That's where what, South Korea. That's where that strength in emerging markets was coming from. Taiwan. So now, as I'm constructing the logic chain, I had the US, which was getting murdered way down here, but now has been recovering. And the lead in the US was IWM and tech. The S&P was lagging a little bit. But semiconductors is even better. Intel is bringing the smoke, and so is Palantir. And emerging markets was already better than the US. It didn't sell off as much as the US. And emerging markets is up here competing with these guys. EFA was better than the US. The US is starting to catch it, but that was reasonable. But Latin America, which had been best, is now flatlining or decaying. and that's Brazil and Mexico on the decline. But now Taiwan and South Korea. So I have that logic model in my head right now. So tomorrow, if the S&P is working, I'm going to read up the stack to see what's doing better. And if any of those are already doing better than the S&P, then that's where I go to immediately. Done in one. Biotech is succeeding. There's your semiconductors. That's even better than Intel. Now, Alex, you were asking me about long-term trading in this one. So when I look at the BMR, I follow that. I also have, my extended list. I have I have the Fidelity Semiconductor ETF inside there. For the last year, and that's given me this, and that's a core position that I'm not going to get rid of because all of the money that I'm making up in the shorter term, pieces of that are getting put into semiconductor because my long-term belief is if we if if the mad monkeys don't blow up the world, then it's because we will have found a way to be peaceful and share prosperity, and that prosperity is coming from semiconductors. So if we don't blow up semiconductors, the sector must be a long-term hold. Has to be. So that symbol is FSELX, because in my thrift savings plan, I can't put ETFs, but I can put Fidelity sector funds. So FSELX is pull that up on a chart sometime and compare it to the Qs and XLK and S&P. Things that are now in the bottom feeders. This is the return of hedge funds. I think that's the return of insider trading. PSP to me is the world of insider trading. I think somebody told Don, "Hey Donald, you need to start giving us a heads up. We're getting murdered over here." I hate to say it that way. That's what it feels like. China is lagging. Its little rate of recovery is not anywhere as good as EFA, Japan, emerging markets, Taiwan, not as good as the US. So that's not a growth story. That's not even a good value play. So I feel that's what I look at on the weekly charts. Kind of gives me that sense from the tables of numbers, and then that gets pulled together. What I try to do is get those insights from the way I'm reading the numbers in the tables. Then this should tell me what I need to. Okay, there's Latin America, head and shoulders above everything else. There's emerging markets, head and shoulders above everything else except Latin America. The other short sources of short-term strength, Japan, and now the Russell. The Russell is the first thing coming out of the US that went from yellow to white. So I can, when I look now at the US, I can come over here and say, everything small cap is strong and mid cap growth, semiconductors, is good. There's Latin America and emerging markets. There's Brazil and Mexico. There's Taiwan and South Korea. There's commodities and energy, and silver better than gold. And there's the energy sector globally. So this is the 9 sector spiders. Now, maybe all I need to do is this. If I just come here, I could have saved the previous 45 minutes, maybe. But I look at the previous 45 minutes was just down in here, and now this summary table. And now this is my action decisions, and now I'm starting to think of the specific operational targets that I can do. So now we take the S&P, break it down to the sector spiders, energy, finance, industrials. That's what you need to know. From the exceptional conditions come extraordinary results. So those are the ones that I'm focusing on as the most volatile. And then I take that and I take equities. Now I compare it to treasuries, real estate, blended commodities, gold, and oil. So it's equities against the world. And oil, gold, commodities have been winning. Now, you were asking me about the BMR. And I told you I have this the accompanying thing. So one of those positions I have is in semiconductors. That's sorry that I have one. I have the Vanguard. There is a commodity fund that pays like a 8 to 10% dividend plus plus it is capital appreciation for inflation. That thing is massively good. That's a long term. Just when you got a when you have a nation that's driving drunk with an orangutan in charge and printing money as fast as it can until the rest of the world just stops buying dollars. Inflation is going to continue to go, and the price of commodities in dollars is going to go up. It has to. So that's my global bet on the idiots in Washington. So semiconductors is my bet on the optimistic future. Commodities paying dividends is my inflation hedge, and my despair of the U.S. becoming fiscally responsible. So I'll never touch that position. And that one's working pretty well. So that's what I want to say about that's what I want to say about this compared to the to the previous tables. And so that's part. So what we're doing right now is essentially in between the monthly decision for BMR. We've just been doing this little elephant walk. This is the weekly check-in, and I can make some adjustments. So if I think about the BMR and then this little, I'm just making my weekly adjustment. Like I have some core position, like the two positions I just described is core. That's the semiconductors and the commodities. I have another one. It's the Fidelity Energy. I forget the name of it, but that is one that I actually am willing to adjust intra-month. Like I took some profits on that when it had such when oil went up to 117 bucks a barrel. I took a little bit off. So I have an energy play in there. But I look at that one as an oscillator. That one oscillates a lot. And when it goes too much to the good, I take a little bit off in order to put it back on when it comes back down. So that one is like a core and turbo, if you will. The semiconductors and the commodities is buy and forget. That's going to be a 200-year hold. So that's what I'm doing now is with that elephant. Just watching his little steps each week, and I use this sort of as my just to make sure that I'm not missing these macro trends. And I'm using that to, and then once a month, I just go ahead and do the BMR anyway, because it just makes sense. That's like a long-term insurance policy. This is a lookup table. This is an actionable lookup table. I'm using the ETF2 model. Like the ETF2 model's strength column is what the BMR makes its decisions off of. But the ETF2 was a weekly system that also looked at strength, consistency, and quality and blended it into an average score. And so when I look at this, Taiwan has a strength in the green, current, and then consistency was white, was good, now great, exploit new strength. Taiwan. For the week ahead, for the next 5 trading days, Taiwan is on my list every day for that reason. What's slowing down? Gold and metals and mining. That's white and green. Got it? Australia is white and yellow. That's this one. It was weak and now it's good. It's not as good as Taiwan, but there was a time when Taiwan was bad, and then it became white and yellow, and then it kept getting better, and now it's green and white. So this is the fast column, and this is the slow column. And quality, I'm sorry, this strength is the fast column, consistency is the slow column, and the quality is the volatility. And then the aggregate, the mathematical average is the average. If I can't, that's like the tiebreaker. What's interesting is you see the volatility of energy. Like energy has been great for the last 10 weeks, but the volatility has been so great that it pulls the average score down into the white. It's kind of interesting to me. And even the volatility of oil, the price of oil was so good that even the volatility didn't take it out of the green. Hey, take a look at what I just have been building for the last now hour. South Korea, oil, semiconductors, Taiwan, Brazil, silver, Latin America, silver, energy, emerging markets. Do you see what I'm saying? Do you see how valuable this table is? And just a basic, simple, monkey proof strategy. And the mathematics behind this, that's without even looking at a chart. If I look at the chart, I'll find a reason to talk myself into trading it. So I start with the numbers in a table and look at relative performance. And then this sort of synthesizes that almost like the four seasons.
Yeah, I'm actually using it, and I wanted a little bit of your critique on the way I'm using it.
Yeah. This is just the practical. Where is the intraday volatility that's tradable? Everything in the green. Oil, semiconductors and energy, South Korea, silver, software. I mean, that's sort of why am I trading those? For his power and volume. That's the weekend report. This one is the complete table. You saw before it had like the top it was like the top 30 and then the bottom 10. That's the same. But this is sorted on the strength column, the exceptionals, the above average, the below average to one minus one standard deviation. And then the reds at the bottom. So I don't even really pay much attention to these. It's just that's cargo. It's just being dragged along. The interesting stuff is what happens on the previous plus the bottom feeders. And that's finance, China, India, home construction. Hey, that's not good for the US economy when home construction is just getting absolutely murdered. That's not good. Oh my God. So that's the transition over to the daily report. I'm going to pause right there for questions. I probably spend more time on the weekend report, like doing what we just did. On the daily report, I tend to go right to the things that I already know. And my daily after action reviews each day already have me geared towards understanding what's on that report. So this is really just meteorology and dashboarding kind of stuff. But this one really describes, this is the BMR, and then what I said about the commodities and semis, separate mechanical swing trading, separate mechanical day trading. This is the blend. When I was talking about the swing trade helping the position, and then using the position trade to find good things to swing. And then this one is swing trading, giving candidates for day trading, day trading, accumulating positions for what turns out to be a swing trade. And then the meta system is the blending of those. That's like the 20, 40, and 40 split. And then these are just the time frames that I'm thinking about when I'm looking at that. So when you see me doing 30-minute, I'm really looking at that's really a foot in swing trading because I'm looking back 3 or 5 days, but also the intraday. The 2 hours is a slower version of that. The 3 day, I should add the 3 day and the 9 day because that's the intermediate between monthly and weekly. So that's what my flexible management system looks like as I try to blend these systems. Questions on that? All right, I'm gonna blast through the daily. Swing trade for tomorrow, one day at a time. This is Johnson and Johnson. It's in the number 2 position, but the oil was kind of standard. I'd already framed one of those. And everything else was oil or energy. So I wanted to frame Johnson and Johnson. So there's my 10-day high. Here's my I'm sorry, no, here's my 10-day high. That's my 30-day high. Ten-day high is a target. Um, that's the 60-day moving regression. Also the PSAR dot, that's a resistance. So that's a target. 5-day high, a target. Also top of the dragon. Bollinger Band main target. The yellow zone. I'll take that trade without even thinking. If it opens anywhere inside the yellow box, I will take the breakout in either direction automatically, using the yellow box as the risk. What I would like to see, since it closed here, I would love to see it open near the bottom and then start to roll up. Then I can use the rule of 4. If I could buy it here with 1 unit of risk, and then I would have 1, 2, 3 units of reward just to get to yesterday's high. That's how I would do a turbo trade. And then if it breaks out, then I'm going to add a position to it. And then before the day is closed, I'll keep 20% of the position as an overnight swing trade. So that's me using the day trade to build a swing trade position at low risk. That was the sniper. This is a sniper trade. This is not an intraday trade, but this is one that's been building for the market itself. If you just look at that big sell-off, this was the turning point in the RL10. And then every yellow dot was like, that's the P1, the R10 crossed the RL30, crossed the spine, price crossed the spine of the dragon, the skin of the dragon, and PSAR flipped, and price crossed the 30 period PSAR, but that flips here and across the uh, Bollinger Band mean there. Here was the big gap. That was a mechanical continuation. And now I'm just playing it as it breaks out the previous day's high, just adding positions. And here we are right now, and my stop is here. The 2-day low. And as we said earlier, my target, I would take that short as a target to the Bollinger Band mean. Is that swing trading? Yeah, that's swing trading. Strictly off of the regression line fractal framework patterns. That's exactly the way I day trade on 3-minute or 10-minute charts as well. Same thing. We've seen the daily. Seen the 30-minute. Just a quick summary of key dashboard indicators. Seen it, understand it. No targets coming out of the mechanical channeling and overreaction. Quick reminder of what's really working, what's really getting murdered. The risk Z compared to the price action, the red and the green lines are the boundaries of the river. That's this 30 period simple moving average plus or minus 1. So when that thing fell out of the river, then reversed, alert. And here's the buying. That's the improved areas for entry below the 0 line in risk Z. So this one looks at the Z scores. Those are the exceptional returns. The 5, 10, and 20-day holding period. This is just a sample of, there's the US, not the US. Some sector spider Z scores. So for me, tech, energy, finance, and industrials, those are the 4 sector spiders that can differentiate from SPY a lot. So I kind of like right now, tech good, energy bad. So there will someday be a reversion to the main trade on that. I get it. I put a block of the story stocks. 4 all-time favorites: Cliff, Devon Energy, International Paper, and Alcoa. They're just, I've traded them for 30 years. And then some other just, this is marijuana, regional banks, Intel, and AMD. And I have those on there because they were not Intel or NVIDIA. Just looking for and they had been lagging those two. And that's been a pretty good focus. So I just look at that as a quick way to estimate on their recent performance, which ones based on Z-score have been underperforming. So Devon Energy is now coming into play for me because it's really bad over the last 5 and 10 days. And as soon as the energy sector starts to recover, Devon should do really well. Just a little note on this right here, the up in here. I get interested in how asymmetrical time and volatility are. If you look at the worst 40-day period in the S&P over the last 10 years, that lost 32% in 40 days. The worst 20-day move was 31%. So that tells you how bad a 20-day period can be. Like if you've seen a 20-day period that was extraordinarily bad, you may have just seen the worst of it. And it's still storming outside, but if you notice this, it's starting to slow down a little bit. That 97.5% means that 97.5% of the worst 40-day was seen in 20 days. And that the worst 10-day had 72% of the worst 40-day. That's how bad a 10-day can be. And the worst 5 days is 18%, which was 50. So fully half of the pain and suffering of the worst 40-day period, half of that happened in 10 days. And fully 34% of it happened in one day. This is why you got to be a volatility trader on the short term. Because you get asymmetric performance. That's the background table that built the previous ones. Daily tactical summary. First thing I look at is the NDX, the boom and the bust. This is really a fractured market where you have things that are breaking down to worst, but also things breaking out to best. That is a bifurcating market. The green and the red signals 1 day outperformance. Only 2 dojis, handful of channelings, handful of auto framers. And then all the framing data. So I use this to find this tactical targets that have swing trade signals. That's how I'm using the swing trade to inform my daily view. Um, 80. Let's skip one. Sorry, I bumped the wrong button and went fast forwarded. Sorry, I'm scrolling back to where I should be. Pardon my mouseology here. Yeah. So the ETFs. Now you'll notice there was a lot of individual companies that were breaking down, but when you aggregate to the indexes and the countries, it tends to follow the market condition. Where there's tons of breakouts. The only thing suffering, oil and XLE energy. but otherwise a buyer's market, a high performing market. The auto framer, standard work, energy at the top. I'm not going to highlight that unless there's a question here. The daily screen. This is where I'm getting the those swing frames of the day. That's taking the auto framer and the squeeze multiplied to produce this number. So something that's far away from the 10-day, and the squeeze compared to their possible range expansion gives you this number like a 1-day pop, and that's where those come from. The TC 2000 interpretation of all these numbers. I go by the reward to risk ratio in descending order. There's your oils, energy, Alcoa. I always highlight the middle of the pack for the S&P. Everything above that line typically is something that short-term underperforming the S&P. Everything below that line is typically closer to its 10-day high than the S&P is, so it's been outperforming on a relative basis. And again, just framing data. Four seasons. Things look good except energy. The NDX. I kind of already know which ones are really good. I always am drawn to the things that got slaughtered because I always think that's an area of underperformance or fear. So I love the fact that some of my old reliables, Alcoa, Devon, Energy, are getting ready. Oil and energy. Yep. Frog trading list. So this one simply takes the range stat percentage. So Rigetti is moving 7.5% of its price every day times the frog quality number. So 7.65% times 2.8 gives you a trading value ratio of 21. So these turn out to be the combination of most explosive and most tightly compressed on a consistent basis, and makes these great intraday traders. Alcoa, Intel, Uranium, Palantir, Oil, Devon, and Rigetti. I mean, I make a living on those, on the intraday trade. The other things I pay attention to, but my bread and butter is just going to those and trading them on a regular basis intraday. No overnight risk. Market mosaic, and this is important. So the black line is the average. Of the slope of the RL30. That's the wisdom line, right? So that's this right here is the last 30 days. That's the straight line regression. This is a polynomial one, and it shows you that this was actually a transition point. This one shows you that at its peak of badness, the downward slope of the 30 had a z-score of 0, -1 at that line, -2, almost -3. A 3 sigma adverse downward slope of the 30, and then it crossed its 10 period moving average right there. And if you read up, that's where it changed from downward to upward, and you could have a long orientation from here, and then you got that trade. So I just think that's such a good idea. You can't really see that on the chart with the naked eye, because you need the long-term statistical interpretation, which is not a natural human visual skill. Yeah, our volatility right now is getting very close to Z1. That's the slope of the last 10 years. It's still pretty good. It's one of the best we've had for a while. This is the decay of volatility is inversely correlated to the gains that the market made. So in the peak of the sell-off, that's where volatility was. Those things go together, hand in glove. And I think that may be one more. Yeah, just the Z-score and ADX. Not much to see there. The market's been so choppy that all of the ADX got chopped up. The two sharp moves in opposite directions destroys ADX strength, which is understandable. I will tell you when I see, I look for turning points here. The Z-score of the 30 when it reverses. There's the 10 leading its way forward. The 30 turns across the 90 there, and everything is pointed up. If you didn't know we were a nation at war, you'd say, "Boy, this is like morning in America. Look at this. It's breaking out all over the place, and volatility's favorable, and all-time highs." You would not expect to look outside and see a world at war. So to your original point, Luis, yeah, crazy. All right, so that's the weekend report. I appreciate you letting me take a little extra time to go through that, but I'm trying to export the narrative tacit knowledge that I use when I read these so that the AI can be trained on that about what to look for. So appreciate your patience. All right, we've been going at it about almost 3 hours. What do you guys got?
May may I ask you, may I go first?
Yep, sure.
Yeah, so if you don't mind, Luis and Michael, just start sharing. The first thing I want to say that I'm gonna do what Michael did. I'm gonna rewatch this, two times this coming week, because this every time you talk through the weekend report, there is new gems are kind of like coming out of it.
Yeah.
And I need to let's say to understand it better. Let's see. Oh, okay. So this is what I do. I take a snippets of your weekly report.
Yeah.
This is from the last week. I didn't incorporate it this week yet. And I take this piece, the snippets that go up to their basically, white to white, and I take then their this part that is let's go here. That is from the ETF Max. So I then I then plan to to buy the ones that are green on green and green on white. And I do that every week. And then I'm adding from their ETF Max the things that are in there that is not here. So there, you see my like notes in here what I do. And then I buy it next kind of like on Monday,
Yep.
and I hold them on for the week, and I don't sell the I put a 2 ATR stop or 10%, whichever is smaller.
Yep.
I can go through the rules next time, but it's what I do. And then what I did, I run a report for how do I move? Sorry, just okay. I run a quarterly report on the results, and so the results were a little bit surprising to me. So here's a quarterly report. So I had this number of trades, 50 something trades. And the win rate was just 32%. So it looks like it's a continuation pattern, but that continuation pattern mostly didn't hold.
Yeah, you're getting at the later, it's the last stages of the relative strength.
Yeah. And so I normalized the results per thousand invested because I bought some of the positions larger, and so I didn't want them to skew the results and normalize them per thousand. And I did when there wins there were larger than the losses, which is good. So there's the median ones, and they're like a win-loss ratio. Because of their win rate is so small, their the profit factor and the expectancy are not really great. And so this I'm wondering what I'm doing wrong. So if I look at this way, this is just a binning of distribution of a return. So there are a lot of small losses, and those small losses occur relatively early, over here. And then their wins start to kind of like getting into their into the third, fourth week. So if that's the wins are booked when they're like when the market is for that particular symbol is turned. So when their stop is hit. So I do adjust the stops weekly. And
Yep.
so that was mine. Kind of wanted to
Yeah. So there's two
open that for the
things.
critique. Yes.
Yeah,
Thank
there's
you.
two things we can do. So this is one that once they get started, they do pretty well if they survive. So what that says is we should be looking at reducing the size of the initial risk, but then looking to add to winners as they go to reward continued success instead of make all of the risk on the front end and then see what happens. you want to start tuning that so that the winners can earn more money as they go. The second thing that we can do is let me get my annotation. There's a procedure I run for swing trades called Trade Index Analyzer. And the idea is if you tell me the date of entry and the date of exit, what I can do is this. We take the date of entry and the date of exit. We say, that is time T. We're going to go out to the 2T time frame. Right. And we're going to find the highest high in the 2T time frame. We're going to call that 100. And we're going to find the lowest low of the 2T time frame, and we're going to call that 0. Check. And then we're going to break that into 100 equal steps.
Mm-hmm.
Check or hold.
Got it. Mm-hmm. Yeah.
So then we're going to find the price of entry on that scale, and we're going to say this is normal. Would be I entered there at an index of 40. And then I'm going to, on a winning trade, I might have exited here. And that is the trade.
Mm-hmm.
If I entered at 40 and exited at 50, I got 10 index points.
Mm-hmm.
Okay.
Mm-hmm.
Now, what I want to find is the shape of that trade in the 2T time frame. Because somewhere in that 2T time frame, it made its, whoops, that should be purple, sorry. It made its highest high. And now what I'm interested in is where did it make its highest high? Did it happen while I was in the trade? Which means that that trade had to have done this and then did that.
Mm-hmm.
And if I've given back 50 index points
Mm-hmm.
and only kept 10 index points, then my exit strategy is bad. Check or hold. If that occurred, if the 100 occurred in the 2T time frame, then that trade, I'm not sure where it went, but it might have done something like this. And did that. I also want to know where was the 2T time low? Did it happen in here? If this thing went like this, I'm sorry, that should be red. And then actually, I'm wondering why didn't it probably didn't do that because my 10% stop should have stopped me out of that. I think. Maybe not. If it never hit the 10% stop at any point then the 10% stop could have been down here. And the lowest low at the score of 0, doesn't matter. The point is, somewhere in the 2T time frame, if I entered at an index of 40, it achieved 100, and then I exit at 50, there was a large downsize move available. If the 100 score, the highest score in the 2T time frame, hit after I exited, then I may have an opportunity for a kata 2 because I had a winning trade. My stop protected me. It found its low, and somewhere in here, there might be a kata 2. Because what if this thing was down to an index value of 20 and then moved to 100? There's 80 points available on a trade where I just captured 10. So if you have that list of trades for entries and exits and the price that you pay, the price and the date of entry and the price and the date of exit, I got a spreadsheet that will turn this into a analytical table that'll do that. And then that'll tell us, should we reduce the size of our risk and then look to put that extra money into things that are working? Should we be developing a re-entry strategy? Should we be developing a stop and reverse? Should we be emphasizing the failure trade? Because you have a system on the short side that has a 70% win rate. So there may be a shorter term opportunity, not a swing trade with a 10% trail, but every failure trade might be a 1-day intraday trade or a short-term swing. So you can have a world in which you can make longer-term swing trades and make money. It's positive expectancy now, but also where under certain conditions, the failure of those trades is a signal for a short-term trade. This would be a case of using the swing trade information to inform day trading tactical opportunities. It may also tell you that if you are routinely seeing the 100 score after the 2T, then there's a re-entry opportunity available that may have less criteria than the front one. And then if we find, then we can start studying what is the kata 2 expectancy and win rate. And then we may find out that the right thing to do is to put $200 on the initial trade. And then if it cashes and then gives us a kata 2, you go to $400 because that has a better win rate. If this is so much better than the first trade, then we may just make that a screening criteria and make that the signal criteria. And if the failure within 3 days is what takes it down to the 2T low, then the stop and reverse with a profit target is indicated. So you have enough data now that we can do that analysis and determine what it is we want to do. So what I need is entry, price, and date, and exit, price, and date, just in a spreadsheet form. I need the symbol too.
Okay, got it. Yeah.
Make sense?
Yep, thank you. Thank you very much.
Okay.
I'll stop sharing.
Okay. What else we got? I have us at almost 10. I'm still good to go. I want to respect your time though.
I have just two questions, Ken,
Sure.
regarding our previous session. As we discussed in the beginning, I'd like to start this weekly review on Sundays by myself to prepare for the next week. And I think would be a good idea just to start from really beginning. So I'd like to on symbol selection.
Yeah.
It's okay just to use your weekly report and daily report just to
Yeah.
select the targets, or
Are you primarily day trading or swing trading?
more swing trading, but sometimes I am available during a day. Of
Yeah.
course, when I plan my days, I know when I will be available or not, because sometimes I'm basically at home and I have time
Yeah.
to stay during the day and watch basically symbols,
Yeah.
right?
So what I want you to do is listen to the session again, look at the reports, and I want you to come up
Okay.
with 3 lists:
Okay.
2, 5, and 10.
Symbols.
Yeah, 2 symbols, 5
Okay.
symbols, and 10 symbols.
Okay.
Two two symbols that you think are. I'm always ready to trade them every day, no matter what the signal was, just because of their nature, their volatility and volume,
Yeah.
and I like the way the patterns look. Uh, that's going to be like a Kata 2 challenge symbol set. Um, and then 5 symbols, which is sort of like your go-to day trade and swing trade, whichever patterns fire for them. They're liquid. They need to be differentiated enough so that one could work or another one could work. They're not too tightly correlated. Like I would not have Brazil and Mexico
Mhm.
because they're too close to each other. I would pick one.
Right.
I would pick something
It's
like,
not like
say,
gold and silver, right? Because
yeah.
similar.
I would pick
Yeah.
like right now. I would go Brazil, silver,
Mhm.
oil, and the Dow 30, and Palantir or Rigetti. Now I have 5 symbols, each one of which is in its own world, doing its own thing, could be framed
Yeah.
independently. One of those 5 is going to jump each day. I have something to do. Then the 10 would be something like the 4 sector symbols, spiders, E, F, K, and I would add semiconductors, um, oil, treasuries, Taiwan, or something like that, so that
Okay.
you can follow
So,
the economic and
okay.
financial flow of the sectors as they go in and out of favor. That builds that you can see the market rewarding one and punishing the other, but then turning points where that starts to reverse. So you start seeing a flow in between sectors.
Okay. And one more thing, because you asked me about this AI assistance, the link in the program.
Yeah,
On the
did I send that to you?
I did not see it
Oh, okay, I will.
because I was
I'm going to get it right now and post it. I should have done
okay,
this last time.
because I thought I have this link,
Yeah.
but when I was basically
What you need
reviewing
is
the
you need a
modules,
Gmail. You need like a Google account.
Yeah, I
Let's
can
see. Hold on.
I have you have my Yahoo email, but if you want, I can send you
Yeah,
my
what I'm
Gmail
going to do is
address
I'm going
as
to
well.
get the link right now.
So to you,
I'm going to post it in the chat.
okay.
I have to just pull it up real
Okay.
quick.
So,
Uh,
so to operate this, I need a Gmail,
yeah, you just need
Google
a
account,
Google account.
basically.
Yeah. Yeah.
Yeah, yeah.
Okay, that should copy the link and in the chat.
So I should, okay.
I have to find the chat window now. All right.
It's okay. Oh,
All right, just copy that whole thing. And then while we're here, just go ahead and click on it, see if you can open it.
Second.
Hey Ken, while we're in the topic of the
Right.
AI, could you explain how is it that we resolve the issues of every time we create a prompt, the AI agent forgets the initial string, and how is that working out? Every conversation starts from scratch. Is that like it doesn't take
Yeah,
back
there's
all the prior interactions?
well, with AI in general, uh, you have to save the chats and put it into a text file. If you have a large enough context window for an AI that you own the chat or you own the AI, and it remembers and it can keep that thread active, it all of the AIs now that you operate uh, retain something in the chat window between sessions, like it remembers what was in the chat. When you use other people's AIs or you're using Notebook, it won't do that. It zeroes that out. So what you got to do is you got to save the whole chat and save that as a text file, and then add the text file in as part of the prompt to recreate the state of the chat. Now, one way to do that is to use an AI to summarize the chat so it takes out the actionable information and the key points. You will typically be able to get about 95% compression with 100% retention of the important information. Now, when you're using the 5 frames, that's kind of what you got to do. Is you got to summarize the chat and save that as a text file, and then include that as the context of to start the next chat. What I would do is I would myself start your own Notebook LM and save the whole chat and put that in there and start adding and then start building up your own reference file of note. Because what you can do in Notebook is you can save the chat as a note and then make the note a source. And now it has access to the full memory of that chat forever and ever. What I do is I stack multiple chats into one note and then synthesize the note into a tightly compressed diamond. And then I stack diamonds together to fill up one source so that in the 300 sources I have thousands of diamonds of insights. And so you just got to build that over time. Now, to get a head start on building your own reference model, save your chat. You talk to our AI, save those chats, copy those chats into your own note. I can send you the prompt that I use to do the diamond compression. I'll put that in the course. But that way you can start building out your own AI reference library, and you can then the reason to use Notebook LM is that it has a really powerful global deep search. You can put search strings in there. It'll go find sources. You can pull those into your notebook. And now you have your own background reference material that you can put in there. If you want to recreate my set of reference files, um, I I would listen to your proposal on how to do if you want to do that. That represents about 10,000 man hours of effort over the last 5 years. Um, and it has all of our uh, coaching conversations, all the workshops, all the books I've written, all the papers I've read, all the books I've analyzed. So there's a large box of treasure right there. So you have access to it here through through that notebook LM. To recreate it on your own, I've basically filled up the 300 sources. I'm going through a major project now to create more room in that by cutting out redundancies and trivial matters in order to make room for more. That's an industrial process I'm going through right there. So I actually wouldn't want to give you the 300 sources I have now because it would bloat your notebook. But the way to I really think the way to excellence on that is to query that as much as you can with your specific questions. Save the chats, put those as sources in your own notebook, and then ask it to produce search strings to extend and expand that knowledge. And then use the power of notebook to do deep research. I'm happy to teach a lesson on how to do that. Probably not this morning because I'm starting to we're pushing time, but that's pretty straightforward in how to do that in notebook. And I can produce a lesson on how to do that. I think I actually have a lesson somewhere, so I can show you how to do that. Anyway, that would be my short answer on how to work around the fact that it doesn't remember the previous chats. You got to save them, digest them, synthesize them, and add that as a reference to your prompt.
All right, thanks.
Other questions? Okay.
Thank you. I'm good.
That's a pretty good 3-hour session there. And I'll get that posted once it gets done processing, and I'll get it put into the I would pay very close attention to what Eric Moe and Sam Thorpe and Ashe are doing on Mondays. Sam and Ashe are getting it done on Monday with the intraday trades. And Eric Moe, I'm telling you, if you don't do what he's doing, I just don't know why. I'm just telling you right now.
Are they cohort
Watch his
four?
test. What's that?
What,
He's
what,
on
what
Thursday.
what cohort are they on?
That's the
Four?
Thursday cohort, 4 or 5.
4, okay.
There's
All
you
right.
guys on Sunday, there's the guys on Monday, and there's the guys on Thursday. Eric Moe is on Thursday. Start with last Thursday's and just look at his numbers and what he's doing. You just do that. Do that. And then look at what Sam is. Sam was doing his own thing on Mondays and had positive expectancy and then hit a sideways patch. And then he just started doing what Eric is doing. Go look at his testimony for Monday. Do that. I'm just saying, cut to the chase. Do that. While you're doing your other things, do what they're doing. I'm trying to get both those guys to start their own fund so you can just give them money to let them do what they're doing while you're learning to do what you want to do. That's how good their stuff is. And I'm talking, I can't remember the last time Eric had a losing month or losing week. Intraday trading only. 30-minute charts, 2-hour charts, standard set of 10 symbols. I should, instead of talking to you about that stupid report for 3 hours, I should have just said that 1,000 times for a minute. That's what I should do. I had to just shut up and just tell you what to do. I'm not going to do that.
It's important. I found it really helpful.
Yeah. Anyway, but that's a case of both guys finding their way to apply the different meteorological things that fits their time and their personality and all that stuff. It's the coat you put on, not the coat that I make. It's the coat you put on and adjust. That's the key. All right, fellas. Have a good rest of the day. And that 30-day challenge, the 30-day Trail Boss Challenge. Each day in writing, declare what you're going to do tomorrow towards your work in progress. The thing you should do should be something you think you can do in about 30 minutes. It takes that level of kind of, 30-minute crunch, and then see how long it takes to actually do it. But then do it, and then write it down in your completion journal, feel good about it, and then pick the next thing. At some point, build out a strategy for the next 5 or 10 things to do, but start with one thing you're going to do tomorrow in writing. Commit to it. Prove that you can do that for 30 days in a row.
I'll start it today.
There you go.
Listen.
There you go. All right. Take good care, guys.
Okay,
Thank you very much. Have a good
Thank
one.
you.
much.
Have a good week.
Okay.
Thanks. Bye.